Well, Growers Edge, I think, has made us more money by allowing me to survey the local bids that I'm in the area that I want to sell my grain. The local elevators and the ethanol plants know that this information is out there, so they've got to be competitive if they want to get the grain. You know, we've been able to maximize our return on our farm.
Good afternoon, welcome to GrainTV. It's November 8th, 2013. I'm Logan Burgess. To my right is Brock Shimano to help break down the action today on the big November WASDE report day. Jumping into fire tip here, let's first take a look at where the grains closed out the trade session. We were up 6 1/4 cents for December corn. January soybeans leading to the upside, up 29 1/2 cents, and a little bit of weakness out of the wheat complex. Chicago wheat down 4 3/4. Kansas City wheat off 4 cents. Certainly the big focus of today's report, Brock, was production side for corn and beans. Starting off with corn here, what did we see?
You know, we did see a pretty interesting trade for the corn market. We were hitting new lows as these reports were about to be released. Yep. As soon as they were released, we moved sharply to the upside, ending up over 6 cents here today. You know, some of the big things that I did notice in today's report, if we take a look at the numbers here, harvested acreage was actually cut by 1.9 million acres. Analysts were kind of expecting about a 1 million acre cut, so that was about double what the analysts were expecting. That's a big number. For yield, we moved higher by about 5.1 bushels per acre there. Analysts were only expecting about a 3 bushel per acre increase there, so that actually added to the overall supply, and that kind of outstripped what we saw cut to the harvested acreage. Yep. So you can see there the last line that production was actually increased by about 146 million bushels. And you know, it's kind of a similar story over in the soybean market here.
Yeah, you know, it really was, Brock. Let's take a look here and see what was reported. Harvested acreage was reduced a little bit more than what the trade was thinking coming into this report, about 700,000 acres. Yield was raised about 1.8 bushels per acre, so a little bit higher yield than what a lot of traders were looking for. On net, though, pretty much in line with trade expectations. As you can see here, right around 3.26 billion bushels projected produced this year in the U.S. today by the USDA. Bottom line, though, what was really driving the trade action today and what's going to continue to drive trade action here as we move into the winter were the ending stocks. Certainly on corn, we didn't even come close to that 2 billion bushel ending stock a lot of people were talking about.
We did fall quite a bit short on that. We only saw an increase on the ending stocks by about 32 million bushels. Something surprising that I saw, the numbers that added to the overall supply actually was the beginning stocks from last year heading into this year. We actually saw that increase by 163 million bushels. Adding to that the increase in supply, we ended up with about 309 million bushels of extra supply. You know, counteracting that, though, on the demand side, we saw some big revisions to feed. We saw that move up by 100 million bushels. We also saw exports move up by 175 million bushels. So that really took away most of that extra supply that we saw, and leaving it was only a gain of about 32 million bushels on the exports, or excuse me, ending stocks.
Yeah, you know, if we take a look here at soybeans here quickly, you can see we did see an increase in projected 2013-14 ending stocks. Really, though, coming in quite in line with what the trade was expecting. On average, analysts were looking for 172 million bushels in new crop ending stocks for soybeans. We came in just below that. If we look at the demand side, we did see crushings increase by 30 million bushels. We saw exports increase by 80 million bushels. So both good demand side numbers there, but really not enough on its own to push this market up 29 cents, I don't think. The one thing that really helped propel this market in today's action was what we saw on the world ending stocks balance sheet. Here in today's action, we saw 1 million metric tons taken off projected world ending stocks. Most importantly, we saw Brazil and Chinese ending stocks both lowered here for the upcoming marketing year. So I think the Brazil story certainly is going to be very important for beans here moving forward. A lot of people have been talking about a slightly smaller crop than previously expected coming out of Brazil. That appeared to be confirmed here today by the USDA, so I think that really helped out things. With that being said, I think if this bean market can make a good run above $13 a bushel, it's going to be a good opportunity to look at making some sales. We have some technical resistance up there by way of the 50-day moving average, and I think here, as we move into the winter, the soybean market's going to have a hard time making a serious run out of this channel that we've been trading for about the last month without a major crop scare out of South America. So keep an eye on that and the demand side numbers here as we move into winter on the soybeans.
You know, I'm right there with you, Logan. If we do get above that $13 level and retest those near-term highs, that was right around $13.10,
yeah.
I'd be looking to make some sales here as well. We did see some technical buying here today by the commodity funds.
Right.
We saw them buy about 10,000 corn contracts, about 15,000 soybean contracts. So they're starting to pull some of their shorts off the table,
yeah.
maybe giving us a little bit of indication that they don't think there's a whole lot more downside potential for both corn and soybeans right now, and especially in the corn market since we did hit that the new lows here today. We got back above 420. Yeah. We saw that support level hold. You know, I think it's going to be a tough task for this market to push us back down towards that $4 level. We might be able to get back below 420, but $4 I think is going to be definitely some pretty strong support here moving forward.
Yeah, certainly. You know, I was talking to you before the show, Brock. We've really been pretty bearish here on the corn market over the last several months. But this does seem to be a little bit of a game changer. We saw the USDA confirm that the crop is going to be very large. That's kind of been factored into price action, though, over the last month or so. But I think some of the demand side numbers that we saw today, export sales, feed usage, and we haven't had any change in ethanol yet. That's something that's going to be needed to be watched here as we move into the winter, and certainly seems like something, the demand side is looking like it may be helping this corn market find a bottom. Certainly we'll have to keep an eye on, as I said, export sales, feed usage, and ethanol as we move here into the winter. Not to leave wheat out of the action here today, take a look back here at the ending stock slide. You can see that we had a slight increase in ending stocks for wheat. In general, the trade was looking for a pretty large decrease in ending stocks, I believe about 40 million bushels. Certainly didn't see that here today. A lot of people were looking for wheat exports to be revised sharply higher. Didn't really see a big change to those projected exports for wheat. So we did see it weigh on the wheat market here in a little bit in today's action, but overall nothing that's really going to weigh on the wheat market. I think people are still looking at some pretty good export sales of wheat to support this thing as we move forward.
If you have any questions about what we talked about here today, give us a call.